Hey there, everyone. So welcome to, I don't know if to say welcome back. It's been been a while since I've done one of these. We recently got ourselves a puppy dog, and he's been eating up a lot of time. Right now, we've got him over the groomers for the day, which is the breeder. Um, and I should post some photos of him, maybe when he comes back from the breeder. But yeah, so he's out for the day, which gives me enough time. So I decided to try and squeak in a market update here. So here we are in August. Few things that we're going to be going over. Um, we've got our typical um, market market trends graphics. Going to be covering what rates are looking at right now, and then I'm going to kind of go over a house that I did an open house on, but I'll show you what I find interesting about this house as far and talking about housing and real estate, holding real estate properties as an investment vehicle. Um, so we'll check this out. Okay, I don't even remember the last time I did one of these, but so we're basically going to go over fresh. So we've got for sale, the light green. So these are houses that are for sale on the market right now here in Kitsap. So right now we've got 541. It's kind of slid down a little bit in July, but not by a whole lot. We're still up. Like if you take 460, so there's still like gosh, almost 100 more houses out on the market right now. We've had a decline in new listings coming up. We only had 373 new listings, but they're still selling at an average clip here. Um, 312. This one's 329. So we're sitting about the mid or like the 320s is kind of what we're looking at here for the summertime. So about 300 and some odd houses sell, which is kind of a little less than what we got 357. So last year July was 283. So it was a really slow July, but kind of in that same ballpark. So we're doing okay on this part. Be interesting to see where this trend line heads. We are heading into the coming up on the school year, so I'm guessing this new listings is going to kind of do one of these as we it starts to trail down into the school year, and fewer people want to go moving. Okay, so let's take a look. Average price per square foot. Looks like it's been coming up. Like it dipped a little bit in April, May, so it dipped a little bit in May, June, July. So yeah, we had a high of 305 thousand per square, $305 per square foot. Still pretty close to the 300 areas. It's not too bad. Still retaining some value on that level. Okay, so days on market. Your house is expected to sell in about a month. Roughly around the 30-day mark is when your house is sell. A little bit faster, 27, 24, but you're still under 30 days, which is in any market is considered a hot market, a pretty hot market. 2 to 3 months is an expected average. Right? I shouldn't say average, say like a healthy market. So this is still a seller's market right here. It's just less of a seller's market than what it was like, a couple of years ago. Original listing price. So yeah, there's still a few minor drops. I'm guessing this is probably agents just dropping it down like $5,000, saying that they can advertise that they've got that they did a price adjustment or a price correction or a price, whatever marketing term they want to call it. So what that tells me is that agents are doing pretty good on estimating the value of the house when they put it up for sale and then maybe just knocking it down a little bit as an incentive. But still trying to push it out. It's not going over listing, but I would wager that this dropping it down like 1% would be a reason why these are helping these sell a little bit faster. So months of inventory, we are still sitting just under 2 months. Healthy market is considered 3 months. What people would see historically. So right now we're still showing that it's a seller's market at 1.7. So we're doing pretty good when you need to offload a house. Okay, so we are done with this 30-day 30-year mortgage. So we're up over here at Zillow and taking a look at what they're seeing for their mortgage rates. A national 30-year fixed rate mortgage rate goes down to 6.101%. So it cut, what was that, 8 basis points. Fell 8 basis points from 6 to 601. We could use a few more points on that one. The 15-year is 5.3, has gone from 5.36 to 5.131. So this cutting this down will really help, help particularly first-time home buyers. And those are the folks who are getting really pinched. I'm going to go over that one next. Okay, so I want to show a house. Now this house is being listed by Terra Scout, and I had the honor of doing an open house on this one. So this is over here on Bainbridge Island. This was built in 1974. It's gone through some updates. Let's go up here. So, and it, judging from this photo here, when I first saw this, I thought this was like a recent build, like, within the last kind of 10 years, because it has that kind of, I guess, similar feel to it that we've been seeing with a lot of these modern houses, where they're very boxy. Got these black trim with like a grayish neutral color palette on it. And then, but as I got into it, when you go in there and you see like this is the original hardwood floor. At least it looks like it's an original hardwood floor. It doesn't really show up like that on the camera, because that's what cameras do. But yeah, it was original floor. A lot of at least on the main level, it was a lot of the original flooring. Same with this tile here. There's original flooring. They had updated the kitchen. Obviously, it's probably a much nicer kitchen from the original cabinetry that was in there. And you got some modern appliances and whatnot. So, just to show you, I think they had added a few additions. So one thing you can't, this is a tiger pattern. You can kind of see it here. You can see how you got a tiger. So that's a textured tiger pattern wallpaper. And I don't know if it's the original, but it most certainly has been well cared for, and you don't see it. You don't see it every day. So anyhow, and it has a lot of daylight. This is the bottom. All the bedrooms are down in the bottom. Look really nice, but when you actually get in there, you can see the 70s architecture. Much of the 70s architecture is still there, despite the modest remodeling that's been going on. But here's what I want to show. When somebody who came through had asked what its previous sale price had been, and so when I went ahead and looked at it, because I guess they were looking for this number here, the 435,000. This was back in 1998, but this is the number that I want to focus on right here. So when they purchased this house on April 1st, 1974, they paid $12,500 for it. Now keep in mind, this house is being listed right now at $1.95 million. We'll see if she gets it. Bainbridge Island, Tara's pretty good about being pretty accurate with her CMAs. So, I imagine it'll go in the next couple weeks. It's getting a lot of high traffic activity. So check that out. $12,000 back in 1974. Now, if that house only retained its value with the cost of inflation, this is the U.S. inflation calculator. 1974 spent $12,000 I suppose it's like 12,500, so we'll make it accurate. So 12,500, calculate. So you're spending close to $80,000. $80,000 for that house. If that house's value did not change at all, and you went and purchased it today at 1974 value, you expected to pay about $8,000, $80,000 for it. Now, I went into the S&P 500 because this is a benchmark for companies that run like large projects, to see how well a project does. If you had invested that 12,500 from April 1974 to July 2024, if you had invested that money into the S&P 500, you would have gotten $748,000 in your bank account, which is still a pretty good chunk of change. If you were the original, if you had just, instead of purchasing the house, you just put it into the S&P, and you just kind of rode the waves up and down. You cashed out. You'd have $748,000. So this house here on Bainbridge Island is beating the S&P 500 by like over 200%, or I guess over 100%. So you're more than doubling what the S&P could make. And gosh, I forgot who it was. I think it was like Warren Buffett or something like that. Said he'd give anybody $1 million if they could trade to a trader who could trade better than the S&P 500, and nobody had ever been able to take him up on that or actually meet it, because apparently in trading and in the stock market, or whatever it is in the investment world outside of real estate, it's actually very hard to beat the S&P 500. But in real estate, if you have a house that's in an appropriate spot, remember location, as it says, you can actually do that. And I pulled this up. So even riding through all these recessions, so this house was actually built in the middle of a recession, is when they built this house. That's 1970. So right here. So a recession started in 1973, which is probably around when they started building this house, and they sold it in 1974. So this is like when I guess interest rates were going up. So somebody purchased this at a 10% interest rate, which, I mean, $12,000 at a 10% interest rate, or even if you wanted to say in today's dollars, $80,000 at a 10% interest rate. So, I mean, I'll take that easy. I'll take that easy, because that's not that harsh. Because even right now, at 6%, and you're looking at some houses being $400,000 or $500,000. Not a Bainbridge, you're looking at like land or something like that. But over in the rest of Kitsap, where your median's around $450,000, $500,000, that still hurts, even at 6%. What I'm kind of the thing that I'm pointing out here is, one, real estate, so long as you don't have idiot city politicians or county politicians, they're basically driving the value down by improperly addressing crime and homelessness and whatnot, over regulating things. if you're in some places like Chicago and Detroit, where it's very hard to sell real estate there because the value just keeps going down. Or if you are in, or if the property gets destroyed, everything is a risk. Natural disasters happen. Doesn't matter where you're at. Natural disasters happen. Some it's earthquakes, some tornadoes, some hurricanes, sometimes tsunamis, sometimes they're man-made. Wildfires, arson, anything can happen over the course of like the lifetime of a person. And on that point, make sure that your insurance is always up to date. Like every couple of years, review the value of your properties and contact your home insurance. Say, hey, I had an agent or something like that do a CMA on my property, and they valued it at such and such. I need to adjust my policy. You might have to pay a little bit higher in that policy to cover the cost of basically what we would say, like if you had to rebuild the entire house from the ground up, and you did not want to be on the hook for any of that, then yeah, you probably have to bump your policy up. But so yeah, that's all I've got for right now. Thanks for tuning in, and I will try to get another one out next month for August. I'm going to be at the county fair. There's like I guess there's like a rodeo or something like that that's going on. John L. Scott has a booth, so I'm going to be down there on Sunday. In the morning half, I think is from like 10 to 1 or something like that. So I will catch you later. Thanks for stopping by and checking this out, and hope you have a great summer. Bye.